So if I'm worried about the loan side, I should also worry about the private equity side because the equity goes first.
That's a good point, because I mean, one of the things that often comes up is like, if you're worried about private credit, you should be really worried about private equity.
If you're worried you're going to lose 10 cents on that loan, the equity is probably
just for the viewers to understand, the direct lending business is basically I'm KKR, put up X amount of equity, and I borrow the rest, and maybe I borrow it from Blue Owl.
Yeah.
But if the company that I own can't pay back the loan, then of course the equity that I own is worthless.
Yeah.
So so if I'm worried about the loan side, I should also worry about the private equity side because the equity goes first.
And let me even give a numeric example and two different things: one software and one food company. Someone goes to buy it, and they think it's worth $150 million. Please. They will put up $100 million of equity, and the lender, Blue Owl, Apollo, whoever,
will lend
$50. And you need to lose almost all of that equity before the lender loses a penny.
I think it's, Warren Buffett always talked about 3 buckets when he thought about investing: the yes bucket, the no bucket, and the too hard bucket. And I think for the alts right now, it kind of falls into that too hard bucket. And while good companies, I think in this environment where you're just dealing with this daily kind of inflow of headlines, it falls into that, kind of Buffett too hard kind of category.
The stocks trade as if the private markets aren't a thing anymore, that no one will put money into these products anymore. And I do think it's important to think about direct lending approaching a potential credit cycle. Direct lending are bullet maturity, meaning you don't get your money back as a lender until the maturity of the loan. So you get a coupon, and then hopefully you get your money back at the end. There are so many other asset classes and strategies across private markets that I do think the stocks are acting like those things will never be a thing again either. And they're wrong on that. They're just flat out wrong. 86% of companies in the United States with 100 million or more of revenue are private. They are staying private much longer than they ever were before because they can get financed in the private markets or by banks in ways they couldn't before. And the lending spreads are pretty tight. So you don't need to go public and deal with idiots like us if you can finance yourself and grow your business without having to add on that cost and annoyance. And so there is some baby out with the bathwater that goes on, but make no mistake about it. They will rise again. They will generate a ton of capital flows again.